Happy November! This is Chad Stayskull from Eagle Wealth Management with our educational economic update for November 2018. In this month's video, I'm going to discuss some of the major headlines that influenced markets in October. I also hope to provide some insight into what these developments could mean to you as an investor. October is often a spooky time for the markets. Historically, it's the most volatile month in the calendar year. Some of the largest crashes have occurred in October too, including 1929 and 1987. The most significant sell-offs during the 2008 meltdown also happened in October. This October's results reflected the month's rocky reputation. The S&P 500 lost 6.9%, posting its worst monthly showing since 2011. This performance led to a $1.9 trillion in losses. Similar struggles occurred in other domestic indexes and worldwide markets. The Dow gave back 5%, the Nasdaq 9%, its largest monthly decline in nearly a decade. Plus, global equities had their worst monthly performance since 2012. So what happened last month to cause these declines? Seasonal volatility may be partly to blame, but settling for that explanation doesn't give you any insight into what investors responded to last month. The volatility started at the beginning of the month with Federal Reserve Chair Jerome Powell. He indicated that interest rates will continue to rise. However, increasing rates were not the only concern on investors' minds in October. Ongoing trade tensions and questions about U.S. corporate profits also affected sentiment. In particular, several major tech and internet companies experienced large price drops after releasing their earnings reports. These stocks can attract investors who are chasing results, so both good and bad news can drive large swings in their prices. Thanks to many companies' positive earnings results, however, October ended with upward momentum. By the end of October, estimates indicated the S&P 500 companies grew by 26.3% during the third quarter. In fact, investors started to buy back these tech stocks that sold off earlier in the month, helping to erase at least some of the U.S. index's losses. Markets closed the month with 2 positive days in a row. So what happens next? Going into November, market fluctuations could continue for a while. Questions about interest rates and the global economy remain. The midterm elections could also affect investor behavior. But the economy seems to be moving forward. The Federal Reserve recently said we are in a remarkably positive moment. Behind last month's volatility, we also learned that the economy had solid growth in the third quarter and the labor market remained strong. Well, as always, we're going to continue to focus on the economic fundamentals rather than letting dramatic headlines sway our long-term goals. And that's it for this month's Educational Economic Update. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 541-330-0220. We'd be happy to talk with you. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of November 2018.